If you are trading with prop firms account and losing prop firms all the time, wasting your money on these online prop firms, I want you to stop, watch this video. I'll share with you some things that will make a big difference and that will help you pass prop firms, but also change the way you see trading in general and change the way you look at building wealth or building an income from the market. Let's dive right into it. All right, everyone, staying currently in Bali in these beautiful hotels. It's been a lot of fun to be here. I want to share with you why prop firms are probably one of the worst ways to waste your money right now. If you're in the market, you're trying to get these accounts, you're losing money because you cannot pass these accounts, or because you eventually pass the prop firm, but then you lose the account once you're live. There's a few things you gotta really think about, and these things are not really shared about on YouTube too much. I don't see really people talk about this very much, so hopefully it's gonna be useful. The first thing you gotta think about when you look at prop firms is really what's the end goal with prop firm? Are prop firms the ultimate thing that will fund your full-time trading? Probably not. They can be a good stepping stone, but they're not something I want to use all the time myself to trade with. First of all, because there's risk of the prop firm closing down. You don't know when they will go away or when the new rules will come up or new regulations that will change everything. And the other thing is that you don't exactly know what can happen with the prop firm, of course. So when you look at prop firm, the first thing you got to think about is what's your wealth framework here? What's the point of prop firm in your trading? What are they going to help you for? And one thing I like to tell people is really using trading to build wealth as opposed to just using it as something to make money or to get rich from. And the way this works is like this. Okay, so the way wealth works is that you have money coming in and you can use that money. You can do this with any amount of money you have. So it can be with $500, could be with $1,000, could be with $2 million, $100,000. It doesn't matter how you use your money there. But you have money coming in. So money here comes in. And that is money you can have from your job, for example, or from investment or any other thing where money comes in. So we haven't drawn much on the iPad for a long time, so it's not going to look very good. But the point is that you get the point here, and that's the most important part. So your job brings you money. Then what you do is you use that money for other things. So you will use that money to go and, let's say, you will trade with it. Now, one thing is that if you look at this and you just say, okay, I'm going to go and use this money, I'll trade, then it's going to make me a lot of money, and then I'll be rich. That has a few issues. The main issue is that the money you get from trading is very inconsistent. One month you might make 2%, the next month you make 10%, the next month you might lose a bit of money. So it's not going to be a fixed income there. So for you to go and live from that income, it's possible, but it's very tricky because, like I said, it's not going to be the same amount every month. So you could spend on your rent, on other things, on other expenses. And unless you live very below your means, then you have a high chance of just not having enough money to pay for your bills. And that's a big problem. So instead what you can do is you can take this off. And as opposed to going and spending this for your money and thinking you'll be rich from trading, you go and invest into other things. So you go here and you invest that money. Maybe not all of it. Like maybe you go and you invest 50% of it. So you will be able to take 50% of trading that you make, half of your returns, you invest them back into trading, right? So 50% goes here. And the other 50%, you invest it in other things that are more stable. Now, we invest in things that are very stable. They can be medium returns, not necessarily high returns, but they are very stable. And that's the key here. I know you're watching this for prop firms, so we'll get to there in a minute here. I gotta explain this first, but it will all make sense in a couple of minutes. Now, once you invest this money, this will give you a very, very predictable income. Why? Because some things that you invest money in, for example, real estate, which I really don't like. I'll do a video on that pretty soon. If you want to see the video, make sure you comment below. I don't like real estate. I think it's a bad investment, but that could be a way to do it. Or you could invest in things like ETFs or even bonds if you want to. Some of these have a very predictable return. Let's make it very low for this example. Let's say you have a return of, let's say 6% a year. So this gives you a 6% fixed return per year. Now, can you get more than that? Yes, you could. You could like trade weekly charts, which is very boring and very safe and will give you a pretty good return. That's more than 6% a year, but I'm going to go very hands-off here for the example of investing. Okay, someone who doesn't want to trade, just wants to invest money after they finish trading it. That's a good way to do it. Now, cool thing here is that you can exactly predict your income. So if you have, let's say, $100,000, then you know for a fact that this will give you exactly $6,000 a year. Now, I know it's not much. It's actually very little, but it's very predictable. By the way, you can make a lot more than $6,000 a year. Comment below, let me know, and I'll do more videos on that exact topic. Now, what prop firms comes into this is that they help you to boost that amount over a year, that amount you're able to invest, and the amount you're able to trade with too, right? So you can trade, but if the platform gives you more capital, you can actually trade more, make more return that then feeds into the investing part of things. And then that will increase your income that you invest, and so on and so on, and then increase your monthly income. Now, if you do this with $100,000, like you will see here, you won't get much, okay? But the key is that you will feed into this over time. And this amount that you trade with will go into your investment, then to your income. And as you build up your account, like you always reinvest that 50%, could be more, could be less, that will feed into, of course, the whole machine over time. So I don't want to get too far into the math here, but figure out that prop firms are going to be a stepping stone. Once this number here is big enough, you don't have to look at prop firms. You don't have to care about going for FTMO or going for the Fivers or whatever. That's all taken care of. You have enough money for the system to run, to make you good, predictable investments that will then give you a very good monthly income. That's kind of how it all works out. But if you have $1 million here over time, that's $60,000 a year. And maybe use some tips that I'll share in other videos if you want to. And that number goes up to maybe even like $150,000 a year, right? Depending what your investments are. That can be much better, but you gotta feed in that machine first of looking at what you trade with, what you invest, and so on and so on. See how that makes sense? So prop firms will just feed into your machine for wealth, and that's really the key part here. You don't want to use them forever. You want to feed into your trading account and then feed that into your investment, and then also be able to kind of have returns that are on autopilot to pay your bills. Now, I want you to be very careful when you pick a prop firm, because if you pick the wrong prop firm, you waste a lot of money. But if you pick the right one, you can make money more easily. It's going to be a lot less stressful and hard to pass the prop firm and to eventually make withdrawals on it. A few ones I want to show you here that will make a pretty good impact, I think you might not have heard of. Everyone's heard, of course, of FTMO, which is one of the main prop firms out there, one of the first ones out there, and one of the big players in the market right now. But maybe you haven't heard of other prop firms, or they're not really a prop firm, but Darwin X Zero is also a good player in the market. They have a different model where you pay a monthly fee that stops once you get funded, but you have a lot more room to get funded and to scale up your capital that way. And they have a program where you can actually scale up faster too, which is kind of cool. Now, you do get a small percentage of the profit, but that amount can scale up really fast. And then you look at investors too, eventually to fund your trading. And that can be a very good way to look at it too. I'll leave a link in the corner here and also below so you can see how this platform works. I've done a behind the scene look at it before, so you can check it out, but also a good player. And the other cool one that I've seen recently pop up in the markets is this new day trader challenge by 8cap. Now, this is really good for traders who want to get paid on the day, like right away. Once they trade, so you can buy a challenge, finish it that day, and get paid that day pretty much, which is really cool. It's a different model. And I don't want to go too much into that, but it's a cool one that I think you might benefit from if you are a scalper or like a day trader. So they have a 1 hour, 2 hour, 4 hour, 8 hour challenge. You can choose how much you pay for it with as low as $5. If you are like a very beginner, that can work out. Then you can multiply your payouts too. And that will give you a drawdown and profit target to aim for. Plus how much you're going to earn on the account at the end of the day. So you can go really kind of as low as $10 here, your earnings, or you can go as far as like pushing this to $5,000 for a 1 hour challenge, which is like really, really cool, right? You don't see this very much out there. So I'll leave a link below for all these prop firms if you want to have a look at them. But the key is pick the one that matches your style and your preference. You can have a 1 hour challenge like this, or you can have a whole 3-month challenge. That's up to you. But there are prop firms nowadays for pretty much anyone out there. All right, the next thing that's really important here is to become a pro at risk management. Now, I've said this many times, but there are techniques of risk management that are just not talked about much in the trading space. Like what you hear often is like just risk 1% per trade and you'll be fine, or just risk no more than 2% per trade. These advice are good, but they're so generic and they don't help anyone. There's a lot more you can do with risk management. And if you want to see it in details, I'll give you a quick version here, but there's a video that Michael Tama did a while back about things that no one talks about regarding risk management. It's going to be linked here in the corner. Don't click it yet, but at the end of this video here, if you want to watch it, it's going to be also on the screen and linked below. You can go and watch it. It's going to be very impactful for you if you haven't learned these things before. But 3 metrics you got to look at here for risk management. First one is your expectancy. Do you actually make money over 100 trades or not? It's very simple. Profit factor gives you a good idea of that, but also expectancy is very powerful. Your max drawdown. So can you survive these losing streaks? You look at your past performance or either like a back test and see how much you've lost in the past. If your max drawdown is maybe 10 to 20%, you should be fine to recover, depending on your personality, of course, and your risk tolerance. But if your drawdown is going to be 40%, that's a lot more hard to recover. That's really, really tough to go over. And the mental side of things, when you lose 40% of your account, it's going to be a very big impact on your performance. And it's very hard to recover. And the third metric here to think about is going to be the risk of ruin. I've talked about this multiple times before. There's also calculators online that you can go and find to calculate your risk of ruin. Basically, if your risk of ruin is more than 0%, you are not a trader, you are a gambler. You're putting too much risk on the table, and by the years as you trade, your risk of blowing up your account just compounds and increases over time. That's also a good way to figure out how much you can risk per trade, because the risk of ruin, as long as it's 0, you should be fine to not blow up your whole account based on your stats at the moment. If your stats change, that's a bit more risky, but at the moment, if your stats stay the same, you put in your win rate, you put in your reward to risk, and with that, you calculate your risk of ruin. It should be 0.0 and not more than that. So we've covered a lot here. If you want to go and watch a video about risk management, it's going to be right here on the screen. Go check it out. It's a very important one. This is stuff that no one talks about much on YouTube. Michael is the only one who really focuses on risk management at that level. So go ahead and watch it. And I'll catch you back here in the next video on YouTube pretty soon. Ciao.